Well, it was another chaotic week on the markets for investors, so to see how it all ended up, it's over to Jayne Edwards with the latest news from Wall Street. Jayne?
Thanks, Alan. And in the end, Wall Street managed to put together its best week since last month's mini crash, with stocks rising for 5 days in a row. On Friday, the indices added another 0.5%, leaving our local market poised for a better week ahead. Share market confidence was boosted by the efforts made by European leaders and the central banks of major economies to resolve the European debt crisis, although the situation is still precarious. The euro is down and shares in major French and Italian banks were sold heavily on Friday, even as European finance ministers met, along with US Treasury Secretary Tim Geithner, to discuss the crisis. Investors are also looking ahead hopefully to next week's meeting of the US Federal Reserve, with expectations high that Ben Bernanke will produce more stimulus from his bag of tricks to kick along the struggling US economy. And with US consumer expectations hitting their lowest level in 31 years, it's clear that something is needed. Over the week, world share markets notched up some decent gains, with the US leading the way. But our local market had a much more volatile week, as Marcus Padley explains.
Well, it's very choppy out there at the moment. This week the market hit its lowest level since it fell out of bed on August the 9th, and we are now down 17% from the year high. The focus has also moved from the US to Europe, and in particular European banks and their exposure to Greek and Italian bonds, and that certainly didn't help our bank sector perform this week. On the economics front, we saw an RBA quarterly bulletin that didn't ruffle any feathers, and in fact, if you look at fixed rate mortgages, it's fairly clear interest rates have now probably peaked. We also saw a NAB business survey hit its lowest level since April 2009. Housing starts were down, but on the good front, we saw consumer sentiment up in September, which is a pretty good performance considering the market fell over in August. On the results front, Myer had an okay set of results at the headline, but they did tell us to expect flat sales and a 10% profit fall next year, and they called the retail environment extremely challenging. On the back of that, both Billabong and David Jones fell over. They've both had profit warnings already, and the whole situation took the whole retail sector down as well. Other results came from Sigma Pharmaceuticals. Their profit was up 112% and their shares went up 20%. And Cochlear was the disaster of the week. They had a product recall and their share price fell 29%. This is the stock everybody loves to love, but it seems in this market nothing is safe. Brokers were doing downgrades to target prices of around 15%. In other news, BlueScope Steel had their annual report, but the shares fell. ASX was up ahead of their AGM next week. Nufarm settled a dispute with Monsanto and upped their earnings guidance, and their shares went up. And finally, Paladin fell despite resuming production in Malawi. Winner of the week this week was Mongolian-focused coal miner Hanu Coal, up 23% after a $447 million bid from their biggest shareholder. And loser of the week was Cochlear, down 29% after their product recall.